Hello, welcome to this video, and in this video I want to explain to you the different types of chart patterns. Now, chart patterns are very important. Why? Because whenever you're trading, it's necessary that you have confirmations for your trades. It's important that you have things that can actually help you to trade without your emotions in place. So chart patterns help to filter emotions when trading, and basically we have two different types, or I would say they are in two categories. We have the continuation and the reversal patterns. So in today's tutorial we'll be dealing with all this, and we'll be looking into it, and you have a better knowledge of what chart patterns is, and you will know how to apply them. So if you're new to this channel, I would like you to subscribe to this channel and also share this video with your friends. Videos like this have been uploaded 2 to 3 times a week, and it's necessary that you get notifications when these videos have been uploaded. So let's just jump let's jump right into it. Now, the first type of pattern or chart pattern that we have is the flag. You must have heard of flags at one point or the other. You must have heard of flag, at different intervals. But basically, flags is very necessary when trading. Now, this is an example of a flag. Let's assume that this is a downtrend. You have something like this. You have something like this. Yes. Now, this is the actual trend. This is the actual trend. This is the actual trend. These pullbacks that are in between are known as flags. You can actually call them flag or pullbacks, but they are basically used to confirm, or when you see them, they give you a confirmation that the trend is continuing. So they are used for continuation confirmations, not reversals. So whenever you see flags, they are proof that the trend is going to continue. For instance, you can see this is a downtrend. You can see this trend dropped this low, then pulled back here, then continued downwards. You can see. Okay, let me show you another longer trend so that you have an idea. Alright, look at this. The market moved up, dropped this way, but didn't come back here, then moved back up, but they didn't come back here and dropped. Now, the characteristics of flags, or I would say pullbacks, is when a pullback occurs, it usually does not return back to the initial base of the trend. You can see that this trend moved from here to here. It will not, the pullback will not return to this place. It will stop between here, between the beginning of the trend and the end of the trend. So you can see it pulled back to just a certain percentage of the trend, then pushed back up. Then you can see another pullback here, somewhere here. You see it didn't drop here, then it pulled back. So one of the ways that you can actually know when a trend is actually reversing is if you see that the pullback drops below the beginning of the initial trend. That is, the trend moved from here to here. So if you see that the market drops, the pullback drops below this level, then there's a certainty that the trend is reversing. If the trend drops to this same level, there's still no guarantee that the trend is reversing. It might still continue. So these are the things that you need to know about flags, or like I like to call them pullbacks. Okay, take for instance here. You can see the market moved from here to here, then dropped, then moved from here to here, dropped, moved from here, then right from here it dropped this low, came here, then dropped this low, then went up, then dropped here, went up then dropped here. You can see that it has already beat this level here, so it's telling you that it tells you that the trend has changed and is towards the downside now. So you can start seeing here, from here it dropped here, went up, dropped here, went up, then dropped again. So that is how pullbacks actually work. Now the next is the 1 to 3 top stroke bottom. Now the 1 to 3 top stroke bottom is also good for confirmations. It's good for confirmation of a new trend. That is, it helps you to confirm that a trend has reversed and it is now continuing in a certain manner. Yes, so basically this is what I mean. So basically it does the both of them. Now this is what I mean. Now you can see that this trend has been moving upwards and dropped this way, move upwards to this level again. Now for this kind of situation, you can see that it dropped below this level here, so you already know that the market is about to reverse, but you still need a confirmation that the market is about to reverse, and that is where the 1 to 3 comes in, whereby you can see that the market moved from here to here, that's 1, then moved here, that's 2, then moved here, that's 3. So at this level it's confirmed that the market has dropped, has changed. So 1, 2, 3, then 4, then you can actually place your trade right here. You can see that this level is different from this, is higher than this level is higher than this level. Remember what I taught you earlier on about trend patterns. Yes, that you have for a downtrend, this is your lower high, then this is another lower high, this is another lower high, then this is your lower low, another lower low, another lower low, like that. So these are the characteristics of a downtrend, and the reverse is for an uptrend. So when you see such in place, it confirms that your trend, a downtrend, is confirmed. So this will be 1, this will be 2, and this will be 3. Once you have this 1, 2, 3 in place, then all you need to do is to wait for the flag to be created. Now be 1, 2, 3, 4, and 5. Yes, then don't forget that this 5 must not return back here. Yes, so that once this flag is being created, then that is where your entry will be made. So that's a confirmation that your downtrend has started. Then you place your sell trade here and you ride the wave all through and enjoy your profit. So the next one is the double top stroke bottom. Now the double top stroke bottom, unfortunately, is really does not give you much assurance as it ought to. That is why even I myself, I don't like to use it, and I've explained the reasons why in the video that I explained the M and W pattern. So if you want to really have a good understanding of double top and bottom and how you can actually use them properly, I advise you go watch the video I created on the M and W pattern. So basically, just like the name implies, the double top and bottom, you see something like this. This is a double top, then this is a double bottom. Yes, so it's a form of W pattern and M pattern. Yes, it's a type of, you have 3 types of M and W pattern, which one of them is the double top and double bottom. So I advise that you go watch the video on the M and W pattern. Just go to my channel and you will see the video for your consumption. Now, like I explained in the video, it's not advisable to actually trade this kind of pattern, because it does not give you, it does not respect the trend pattern. It does not respect the trend pattern though, but sometimes it could be useful if you find the M and W pattern on a support and resistance level. They tend to be more profitable when they fall on a major support and resistance level. So it could be used as a continuation, and it could also be used as a reversal. Now let me show you what I mean. Now you can see this situation here, this line you have here. You can see this is a double, this here is a double bottom. This is a double bottom. Now, and you can see that it was used as a continuation. That is, you can see it's an uptrend. You can see the market dropped this low but continued upwards. So here it was being used as a continuation. It was being used as a continuation. So like I said, it could be used as both a continuation and also as a reversal. You can see here it's being used also as a continuation to the upside. So it has different functions, but like I said, it's not as profitable as the M and W pattern. It's not as profitable as the proper M and W pattern. So the next we'll be looking at is the cup and handle. Now the cup and handle is usually used as a continuation pattern also, and the truth is most times you usually require an experienced eye before you can actually locate it. It usually looks like, you can see, it usually looks like a cup and handle. That's how it usually looks like. So a lot of persons find it hard to discover or to locate, because sometimes it takes time to form and you might need a lot of patience to locate it. But let me just show you how it looks like on the chart. Let me show you an example right here. Okay, you can see something like this. You can see here the market has been moving downwards right from here, moved down, went up, then moved down this way. Then in order to show that, oh, the trend is changing towards this side, so you can see the market moved this way. This is the cup, then you can see the handle right here. Then it broke this resistance line to the upside, then came back to retest it and made it a support, and right here it shoot up. You can see how long the trend is. So that's how head and shoulder works, and head and shoulder is quite reliable if only you can spot it, because sometimes it's difficult spotting. Sometimes it could be difficult to spot. You can see we have something similar here. You can see that the market came this way. This is the cup, then this is the handle. Then it came this way and retest here, pushed up, retest, came down, it's still retesting. So we're expecting this to still push upwards, the more. So that's that on cup and handle and how you can locate them. Then the last but not the least, which is one of the most reliable pattern for trading, for confirmations on your chart, is the head and shoulder. The head and shoulder is also another difficult pattern to discover. Why is this? Is because it's not easy for the eye to pick, and sometimes it does not come in the way that you expect it to come. Yes, Normally the head and shoulder is supposed to look like this. Let me show you. This is the shoulder, then the head, then the second shoulder, then it drops. So at this level here is where you place your entry. Right here is where you place your cell entry. So the head and shoulder is used basically for to show that the trend is moving downwards. Then the reverse of this is for an uptrend. Now for an uptrend you have an inverse head and shoulder. That is, it looks this way. You can see it's inverted. You can see it's inverted. So that's that. So right here is where you place your entry, then you buy. So head and shoulder has over the years been a pattern that has been respected by experienced traders, and a lot of traders actually look out for it seriously. They wait for it to take place before they actually place their trades. So these are the patterns that you can actually see on your charts, and these 5 patterns are very, very important, and they actually make trading easy, and it can be used for confirmations. So if you've been trading with emotions all this while, this is one of the ways that you can actually eliminate your emotions from your trading, by using chart patterns. So I implore you from today that you try as much as possible to recognize these patterns. Try see the flag, try see the head and shoulder, the cup and handle, the double bottom, and the top, the 1 to 3 move. Also try as much as possible to check out for all these patterns to see that they help you for confirmations. And also you could also ensure that before you place your entry, try look out for candlestick patterns that gives confirmations. Also, when you see all this, it gives you assurance that the trend will move in your direction. So if you're new to this channel, and if you enjoyed this video, and if it was informative, I'd like you to subscribe, and also please do share with your friends. And also, if you have any comment, please drop it in the comment section below, and don't forget to check by next time so that you can get notified of new videos that we upload. So I'll see you next time. I remain your boy Leke. See you in the next video.